Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A shooting star pattern type 2 bullish on Friday, following on from the previous session's bullish closing long like Mariposa and bullish engulfing pattern. This time the closers are right on the purple lower time, currently at 110.82 of the late June to very early August bullish Andrews pitchfork. Prices seemed very reluctant to venture down towards the bright red, slowly declining head and shoulders neckline extension below of the July 2017 to November 2018 move, and that's currently at 109.88. This is further evidence for a possible repair to the breached purple bullish Andrews pitchfork. The market is also within what I consider to be a tentative late August to date descending wedge pattern, currently at 109.88 to 111.25. Now we'll see how the one develops, especially the upper trend line. Now so far today, an open dipping below, just below the purple lower time, but a strong move higher, testing now the upper trend line of the descending wedge pattern. That's currently at 111.25. Above this, we have the interesting congestion from March 2023 that caused the November 2023 high at 111.39. And beyond that is the dark blue reverse head and shoulders neckline extension, currently 111.60 from January to February 2021. This neckline capped the market in late August and again 2 weeks ago. Cable, aka sterling against the US dollar. An indecisive doji cross on Friday after the previous session's immediate countering bullish engulfing pattern. Prices pushed up over the congestion from the December 2020 low at 131.33, as well as the July 2023 high at 131.43, but failed to close over either, ending up roughly where they started. Below we have the July high at 130.44. Overall, prices are in between the overhead dark blue middle time, currently 132.44, and a dark blue lower time below, currently at 129.63, and that's of the bullish Andrews pitchfork for the late June to early August move. I've been asking the following question over the last few sessions. Has the move over the last few weeks developed into a bullish halfway hesitation or a double top? I do not think we have an answer just yet. We had been veering towards being a small double top, even Adam type, possibly on the edge of being a horn top as well, but late last week's actions have countered that idea. All I'm seeking is just a confirmation of which way prices would choose to go. Now, so far today, a lower open, but then a strong move higher over the congestion at 131.33 and 131.44, seemingly establishing itself over it. It looks like a bullish engulfing pattern today right now. That wouldn't be very hard, with the previous session being an indecisive doji cross. Euro sterling. A second indecisive pattern on Friday, this time an indecisive doji cross, after the previous session's indecisive spinning top. The close was right on the breached upper trend line, currently at 84.31, of the previously broken and possibly repaired recent August-based descending wedge pattern, as currently at 83.84 to 84.31. The base of the slow, gradual recent move up is the congestion at 84.05, dating from August 2022, with further congestion below from the same period at 83.86. That was responsible for July's low at 83.81. Meanwhile, overhead, beyond the upper trend line of the descending wedge pattern, we have the April 2021 low at 84.70, and the flatlining green short medium moving average, currently 84.63. We are seemingly trapped right now within this large June to July sticky congestion zone between roughly the April 2021 low above us at 84.70 and all the way down to the 2024 low in July at 83.81. Now this zone is not specifically defined, so if prices do move, well, you may find some places with little or no support or resistance and others with a lot. So far today, a somewhat sideways movement, but doing so, prices are exiting out of the descending wedge pattern, though right now, not really going anywhere. US dollar against the Japanese yen. A bearish opening black Mariposa on Friday and a fourth bearish black crow with a new low and low close not seen since July last year. Prices were capped by the bright red broken lower time, currently 141.84, of the shallow December 2023 to early August 2024 bullish shift pitch walk, and even managed to punch down through the interesting 38.2% Fibonacci line of the January 2023 to July 2024 move at 140.48, but failed to close below it. Now, with prices pressuring lower, then we could be forming what I consider the answer to a big picture question. Whether the action since the high in July to date is a bearish halfway hesitation. Right now it is starting to look that way. Thus, as I said last week, I'd better keep at least a potential, or give at least a potential now, if not a target below for such a pattern. This would be down in the 131 even zone, possibly as far as the 129 even zone. Please bear in mind that 2 weeks ago we had a weekly key reversal down pattern, and this should not be ignored. Looking further down, the next support of note is at the in the 138.04 zone, followed by the July 2023 low at 137.26. So far today, a further move lower, down through the lesser 38.2% Fibonacci line of the January 23 to July 2024 move at 140.48 that helped create the low of 140.24 back in December 2023. This continuing move lower also continues to revitalize the idea of a new, larger, bearish halfway hesitation move. US dollar against the CNH, the offshore Chinese yuan. A third bearish black crow on Friday after the recent immediate bearish harami and outside day. Immediate countering bearish harami and outside day. That was also a possible hammer pattern. This was a further continuation of recent moves lower, this time down through the lesser Fibonacci line at 711.61 and down to the top of the broken dark blue August to date bear channel, and that's currently at 702.11 to 709.13, closing right on the upper bear channel line. It also negates the attempt higher out of the late August to early September based horn bottom, actually questioning its very existence. Further down, we have the August low at 707.01, just above the June 2023 low at 706.57. Now, so far today, a slightly higher open, but a seeming failed attempt higher, and we are back down towards testing that dark blue upper bear channel line again. US dollar against the Mexican peso. A bearish closing long black Mariposa on Friday and third bearish black crow. Prices were capped by the 2021 low at 1953.63 and dropped down and closed below congestion at 1940.68 and within a small congestion band 1915.03 to 1920.38, containing the 50% Fibonacci line of November 2020 to April 2024 move at 1920.38 and the March 2020 low at 1915.03. Now, to my mind, and this is a question that is quickly being answered, but to my mind, there is still a question outstanding as to whether the mid-July today action is a bullish half hesitation or a double top. Recently, I've been more sided to the idea of a bullish halfway hesitation, but with the supports below each day becoming shredded, the idea has turned now more towards a double top, an Adam and Eve type as well. Overall prices are in between the bright red overhead middle time, currently at 1990.59, and the bright red lower time below, currently at 1889.34, of the April to July bullish shift pitch hook. So far today, roughly just outside the area of the small congestion band, 1915.03 to 1920.38, though looking a little reactionary higher right now to, well, to nothing really.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.